Generally speaking, expats moving to Italy don't trust the local revenue agency that much. I cannot blame them. When I talk to my clients, very often they confess they have doubts about the application of tax benefits, for example, audit process and tax deadlines. The problem here in Italy is we have unique rules that sometimes don't follow a precise plan. Sometimes you pay taxes for the current year, sometimes for the fiscal year, and so on. The very first fiscal year in which you become a tax resident, and by the way, this could be the next one compared to when you actually moved to Italy, the 183 days rule, remember, you won't have to pay any income or wealth tax. Yes, really. If you become resident, let's say in 2023, for example, you don't have to pay a dime for personal income taxes until June of the following fiscal year, so we're moving to June of 2024. Sounds like a bargain. If you play with time wisely, you can basically enjoy almost a tax-free year staying here in Italy. And this is the explanation in the short run. But what happens in June of 2024? Let's take the time machine and sit down in front of your concerned tax consultant. Why is that? Well, because he has to tell you something that will sound really, really bad to you. And it will sound very unfair. If you come from, let's say, low countries with the common law, for example. In June 2024, you will be required to pay balance taxes for the full previous fiscal year, so 2023. So using percentages, the tax rate will be 100% of the taxes due as balance for 2023, plus 50% of the same amount as account in advance for the current fiscal year, even though it's not completed yet. And I'm not done. In November of 2024, you must pay the remaining 50% of payment on account, second round for the current fiscal year. We're just using round percentages. Very often, they split between 40 and 60%. The big takeaway here is that by November of the following fiscal year in which you become a tax resident in Italy, you pay almost twice as much, 200% of any balance taxes due. You pay upfront with the benefit of using the possible credit by the third year in compensation. So, when you do your math and work on a family business or financial plan, consider this double rate in your expenses because it could impact in a very huge way on your bank statement. Just to make things even worse, the same logic applies also to Social Security payments if you are an independent contractor or business owner or a freelancer. So now you may be thinking, well, I'm an employee and my Italian employer will take care of that. You're right. Indeed, by the second year, you get a slimmer payslip due to these account payments provided by the law, so it doesn't change a thing. From the year 3 onwards, if your personal income is almost the same, then you'll pay just the rounds as accounts and start to manage a decent and effective tax rates. But remember, get prepared for year 2. That's the real Italian welcome.